And this is Bloomberg Technology. Coming up, semiconductors in flux as a cooling global smartphone market unnerves Wall Street. We'll put the forecast that rattled investors into focus. Plus, Palantir's web, why the Pentagon, FBI, and other law enforcement agencies tapped Peter Thiel for help with the war on terror. And how his data mining company flew mostly under the radar until now. And Amazon's underpaid army, our look at the other story buried inside the letter and the window it opened into the company's rank and file. But first, to our lead. Apple and a slew of chip makers fell Thursday after Taiwan Semiconductor issued a growth forecast that rekindled concerns that the handset boom is waning. The chip manufacturer predicted sales for the current quarter will be $1 billion less than analysts had projected. That followed a report by the International Monetary Fund earlier this week that smartphone shipments declined for the first time. A reminder that the best days may be in the past. Bloomberg Technology's Mark Gurman, who covers all things Apple, and Bloomberg Tech's Ian King, who covers all the major chip makers for us, both join us now. Ian, I will start with you. Why is this having such a big impact on Apple shares?
Yeah, I mean, it's a good question. TSMC is a lot more than just a low-cost contract manufacturer. They're really the leader in this new wave in technology of outsourcing chips. If you're a smartphone maker, it's quite likely that the main component in your product was created in a TSMC factory. If they're saying we're not getting the orders that we thought we were, or that the market thought we were going to get, then that's a very bad sign.
So what is driving Taiwan Semi's weak forecast?
Right. Communications. They don't give the specifics. They don't say this customer isn't ordering or that customer isn't ordering, but they did talk about general areas. The biggest part of their earnings is what's called communications. It's all of the smartphone stuff, all of the Apple stuff, and that's what they said is weaker.
Mark, what other indicators are we seeing that smartphone demand may be slowing down?
You know, that's a good question. I think the biggest indicator is iPhone sales in the Q1 holiday quarter. Those came in at about $3 to $4 million less than expectations. Apple reports earnings on May 1st, so we'll get a better indicator if that was sort of a
3 to 4
one-off.
million phones.
3 to 4 million phones fewer than expected. They were projected in the holiday quarter to sell around 80, but they sold about 77 million phones instead.
So, obviously we do this every single quarter. Every single quarter, we're wondering, is this global plateau finally happening? Is this it, or are we going to be asking again next quarter?
Yeah, I mean, we were talking about this earlier. There are puts and takes, right? I mean, there's, on the one hand, there aren't that many more people in the world that don't have a smartphone, right?
And they're keeping them for longer, right?
Right, that's the other part of it. Has the design changed radically? Has the functionality changed radically? Maybe it's my chip guys that aren't producing that much better chips anymore. Maybe it's the screen makers, but they're all kind of pretty good, right? And that is one of the concerns. The other part of it is, well, actually, if you look at it, look at India, look at some other parts of the world, maybe people are getting to an economic level where they can go out and spend $1,000 on an iPhone 10.
The interesting thing is we're about to go into one of the most significant transitions in the history of modern technology. We are at the end of the smartphone, but the question is what replaces it? Is that AR glasses? Is it home IoT products? Is it something else? So chips will always be around. It's just about which form factors they're going to be placed into. And from a TSMC perspective, they're not in trouble. They're always going to get the phone ringing for new chips to be built.
We are at the end of a smartphone is a fairly bold proclamation from Mark Gurman here. I mean, would you agree?
I don't have a personal opinion. The industry says absolutely not. The industry still believes in technology. They still believe they have things to offer that are going to surprise and excite people. But we haven't seen it. I mean, you mentioned in passing AR, VR. These are supposedly things that are going to be made into our phone. The smartphone is going to be the hub of all of these new technologies. They've been talking about that for several years, right? And it hasn't really happened.
So, Mark, there was a big design change with the iPhone last year. Are people holding on to their iPhones longer despite that? Are people upgrading, as we expected them to? Or are they keeping the iPhone 8 that they had.
Well, here's the deal with the new iPhones that came out last year. You had an iPhone 8 and 8 Plus that looked nearly identical to the iPhone 6 and 6 Plus that came out in 2014, so 3 years earlier.
But the iPhone 10 looks completely different.
Right, but it also costs about $300 more, which is a lot of money for a lot of people. So at the same time as having this low-end phone that didn't look much different than the previous 3 phones, they had a more expensive phone that looked different. So they kind of had a little issue there. There was that gap. There was that gap in the middle of people who would want to upgrade for a new design that couldn't afford, you know, the more expensive one. They're going to change that this year with a redesigned lower cost model that comes in at that cheaper price point, replacing the 8 and 8 Plus. So they know this too.
Ian, is there anything else in the supply chain that we're seeing that's concerning?
Yeah, I mean, we saw a chip equipment maker, Lam Research, probably somebody you've never heard of, but they're a major supplier to TSMC.
I've heard of Lam Research. What are you talking about?
They're a major supplier to TSMC. They're a supplier to the memory chip industry. They came out and said, well, we thought orders were going to be roughly equal in both parts of the year. Looks like it's going to tail off a little bit in the second half. That got people going, oh, maybe this is a sign of a downturn.
Apple earnings coming up in a couple weeks. What are the expectations? The
expectations are revenue results between 60 and 62 billion, which would be about 15.5% year-over-year growth.
How many iPhones?
How many iPhones? That's a good question. More than I have in my closet, but it'll be tens of millions of phones. It'll probably be, I mean, I don't have the analyst estimates on phones sold yet because we're not quite at the time when the analysts put those out, but it'll be fewer than the 80 million they sold in the holiday quarter. It's interesting to see. They really need a year-over-year growth on the iPhone side, or else the iPhone 10 combined with all of these, you know, negative remarks from TSMC and the suppliers, it's going to be a bad look for Apple if they don't hit it out of the park.
All right, Bloomberg Tech's Mark Gurman and Ian King, thank you both. Thanks. Okay, well, Twitter's bet on streaming video is beginning to pay off. The social media platform still trails Facebook in monthly active users, but an increasing number of advertisers are buying slots on the timeline. Twitter's daily active users jumped 12% over the last quarter, marking the 5th time in a row it recorded double-digit year-over-year growth. Twitter reports earnings next week. Shares are up 30% this year. Coming up, Peter Thiel may have ditched the Valley for the Midwest, but he is not ditching the technology it created. We look at the secretive surveillance software in his tech empire next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com in the U.S. on SiriusXM. This is Bloomberg. Hulu is now reportedly worth $8.7 billion. This according to Disney, which laid out the valuation as part of a filing for its planned merger with 21st Century Fox. Disney is buying most of Fox's entertainment assets in a $52 billion all-stock deal, which would include taking control of Hulu. Time Warner owns 10% of Hulu, while Disney, Fox, and Comcast each own a 30% stake. If the Fox deal closes, Disney ends up with a 60% controlling stake of the video streaming giant. Well, it is one of the most secretive technology companies in the world, and it is mining massive amounts of data being used by everyone from the Department of Defense to the FBI, local law enforcement, and more. It's called Palantir, the brainchild of billionaire tech backer Peter Thiel, and its software combs through financial documents, airline reservations, cell phone records, social media, and other digital footprints. The result? A spider web-like creation linking it all together. Now, Bloomberg Businessweek is shining a light on the shadowy nature of Palantir. The article, called Palantir Knows Everything About You. And I would like to welcome one of the authors to this deep dive, Bloomberg's Lizette Chapman. So, first of all, talk to us about what Palantir actually does.
Absolutely. Palantir pulls in different chunks of data spread across the internet, through your phone, etc., into one spot and then mines it for meaning, pulling up different connections that would otherwise be lost on humans.
So this isn't illegal. This is perfectly above board.
It is perfectly above board.
But there is a question of how far is too far, and should laws prevent going so far, correct?
Exactly.
So talk to us a little bit about what you learned. You talked to 100 people for this story?
Yeah, myself and my co-authors, Jordan Robertson and Peter Waldman, we talked to about 100 sources for this, come through a lot of documents as well. And some of the things that we learned included just how deeply some departments were willing to go or had explored going. For example, the LAPD has used it extensively, and they looked into purchasing private data from camera feeds from hospitals, parking lots, and even pizza delivery information from Papa John's and Pizza Hut. And so one of the things that became clear that was, Mark Zuckerberg highlighted in his testimony as well last week was how much data is available on individuals and how little they control who has it and what they do with it afterwards.
Now, Mark Zuckerberg was actually asked by one of the senators about Palantir, and it was interesting. He didn't have all the answers, which is intriguing given that Peter Thiel is a longtime Facebook investor and board member. But the indication was that Palantir may be doing something wrong. Did you find any evidence of that?
There are a lot of questions about how it's being used, and ultimately it's up to whoever is using it. Palantir sells the software, and then the customers and ostensibly their PCL, their Privacy and Civil Liberties team of engineers, decide what are proper uses and of how that technology is employed. For example, with JP Morgan, there were over 120 forward deployed engineers that JP Morgan employed for several years there to look for any insider trading or any type of problems. But how they wound up using it was quite different. It actually turned into an internal spying mechanism on JP Morgan employees.
So is this sort of like the weaponization of data?
That is a very good point. I think it's fair to say that. The way that it has been used has been unequal by different customers. Merck and Airbus, for example, they use it for things like supply chain automation and looking for parts and drug discovery. The Department of Homeland Security uses it to keep tabs on immigrants. There were some conversations about whether Palantir was going to be used to create a Muslim database some time back. So
Palantir knows a lot more about me than Facebook, probably. Is that what you're saying?
Facebook is one of many, many sources of data that a Palantir system would have access to. And as storage gets cheaper, as people sign on to more and more and allowing more and more apps to access their data, that trove just increases exponentially, not to mention all of the third parties that can buy it, that it's free reign on the open market for that.
So how reliable is Palantir? Are they, we saw the spider web earlier, are they creating reliable connections, reliable conclusions, or, could some of these conclusions they're drawing be false?
It all depends on the data that they are sucking in. It's kind of helpful to think of Palantir like a spy's brain. It doesn't actually do the spying. It connects the eyes, the ears, the hands that's in there, that's actually collecting the data about the world around us. And then Palantir pulls it together and figures out what it means. The significance of this is that there's so much data out there, and Palantir is a very powerful tool for pulling it all together in a way that is unprecedented.
What's Peter Thiel's involvement today?
Peter Thiel is the chairman. He is one of the co-founders, and he owns a massive amount of the stock, both personally and through two of his investment funds, Mithril Capital and also Founders Fund.
How much is Palantir worth today? I mean, this is a company that people have talked about going public, but certainly still hasn't, and also has been valued at, as I understand it, tens of billions of dollars.
It's been up and down, Emily. It was last valued publicly by private investors at $20 billion in 2015. Since that, Morgan Stanley has written down its stakes multiple times. The last report that we have was about $6 billion. So it's written it down many, many, many times, and this was according to Bloomberg Holdings in December. What's interesting about this company, as powerful as it is, with hundreds of millions of dollars of contracts in the federal and the state and local agencies, plus all of the private deals that it has with corporate players, it still has never turned a profit. So I think that there's going to be some pull and push, according to the sources we've talked to, about how much they're going to want to automate this system going forward, which of course removes human judgment, the one thing that ostensibly is protecting some abuses in the drive for profitability.
Fascinating. All right, great piece by Lizette Chapman and a couple of other writers here at Bloomberg. Thank you so much for sharing that with us. You can catch that in this week's issue of Bloomberg Business Week. Coming up, British artificial intelligence startup Benevolent AI announces a new $115 million funding round. Details on one of the largest funding rounds in the emerging AI pharmaceutical sector next. And Bloomberg Tech is live streaming on Twitter. You can check us out at Technology, weekdays 5 p.m. New York, 2 p.m. San Francisco. This is Bloomberg. Benevolent AI is a London-based startup that is using artificial intelligence to discover new drugs. The company has received $115 million in new funding to hire more people and expand its focus to new diseases, giving it a valuation now over $2 billion. Earlier, Bloomberg's Caroline Hyde sat down with Ken Mulvaney, Benevolent AI's co-founder and chair. She asked how AI can fast-track drugs and bring them to market.
We're trying to bring drugs to very, very difficult to treat diseases. So at the moment we have 20 drugs that we're developing, and they'll treat anything from ALS, Parkinson's disease, sarcoma, just things that are very, very difficult to treat and require actually very scaled knowledge, because they're very, very specific diseases that require that you have all of the information in order to define a treatment for those.
And by scale knowledge, there comes the power of artificial intelligence, there comes the power of machine learning, there comes the power of data, I assume.
That's right.
How is AI really fast-forwarding, fast-tracking the process of finding drugs that work and getting them into the market?
Yeah, so part of it is scale. So the system has ingested 25 million publications, hundreds and thousands of clinical trials, genomic databases, proteomic databases, chemistry databases, and has digital recollection of what each and every fact is that's ever kind of written in the compendium of human knowledge as it relates to human biology. And then it can reason on top of that. So I kind of think of it as we have all these knowns out there, and we've done an amazing job standing on the shoulders of giants where all this research has taken place. But there's so much that we don't know about disease. And what this technology can do is it can begin to reason and say, well, if I know that, I should also know this, except for this, I should also know it has never been discovered. And we generally focus on diseases that are very, very difficult to treat, that have a lot of different factors. Like ALS is a good example. There are 30 genes associated with ALS. This is the disease that Stephen Hawking recently passed away from. And as a patient, you could have one of those gene mutations, you could have 4 of those gene mutations, or 30 of those gene mutations. But what's so difficult about it is 85% of patients don't have any of those mutations. So there's a lot going on in that disease, and it requires us to really scale our knowledge to the point where, to date, a human scientist has not been able to kind of hold all of that information and begin to reason on that information.
And so a computer can. Here comes in Benevolent AI, and you are scaling the business. You're raising money, $150 million. What is that going to be used to do?
Well, much of it is going to be used to expand our therapeutic footprint, so to begin to look at other diseases. Also scale the business. We're about 165 people at the moment. I think comfortably we'll be 300 around by the end of the year. And we'll be growing from there and really looking at making an impact on those diseases. And it's kind of a mix between biological scientists that we need and advanced computer science that we need to tackle some of these very difficult problems.
Where does the talent lie? Where do you need to hire?
We have offices in London and in Cambridge and in New York, and those seem to be the hubs that have really the deepest talent pools for the type of skills that we need. The UK has been, historically very strong in the sciences, both biological sciences and more innovating in the AI sciences. It's a really good place to be.
Not under threat from Brexit?
No. If you look at the footprint of our staff, they're from all over the globe. So it's something that we're mindful of. We're hopeful that these very, very talented scientists will have a place in the United Kingdom.
Who's your competition?
Well, that's a good question. In terms of artificial intelligence companies that have this capability, at the moment we stand alone. There are companies that do components of what we do, but in order to really define the right target, you also have to understand the clinical landscape. So you have to be able to understand the whole process end to end. So it's probably more the pharmaceutical companies that we feel we'd be making the biggest impact on those, rather than the kind of the more niche AI players that will look at maybe target ID or chemistry. But actually the ones that, a company that has the breadth to go all the way from a preclinical development all the way through the clinical process.
What's your all the way? You're now worth over $2 billion. Do you remain independent? Do you get bought by a pharmaceutical giant? What happens to Benevolent AI?
It's a good question. We set out this company to kind of retain our independence. We do want to bring drugs to market. It's certainly a passion of mine. I think that we can make a difference, particularly in diseases that are really hard to treat.
Bloomberg's Caroline Hyde there with Ken Mulvaney, Benevolent AI's co-founder and chairman. Coming up, we've had some big tech IPOs already this year, and there appear to be plenty more on the horizon. We will discuss next. This is Bloomberg Technology. I'm Emily Chang. The 2018 U.S. tech IPO market kicked off with a bang. Companies from Dropbox to Spotify have hit the public markets. In fact, if you hop into the Bloomberg terminal, type GTV Go, you will see the quarterly value of U.S. tech IPOs by trading date. And if you scroll over to the right, you'll see we've got some of the biggest IPOs hitting the tape since 2014. Now we have more news on what could be the biggest public offering of 2019. With Uber naming its new CFO, and on Monday over in China, we learned that Xiaomi may file as soon as next month, seeking a $100 billion valuation and what would be the biggest IPO since Alibaba in 2014. Here to talk about this and much more, Enrique Salem, Managing Director of Bain Capital Ventures, also former CEO of Symantec. And with us in New York, David Politis, founder and CEO of Better Cloud, a company providing security solutions for cloud-based working platforms like Slack and Salesforce. So, Enrique, talk to us about the global tech IPO landscape and how bullish you are.
Yeah, so this has been a very interesting time. This year, we've seen 9 major IPOs in the technology industry. You saw Dropbox and Zscaler go public just recently, and there's a lot of other companies that are in registration right now, companies like Pluralsight, Pivotal. You also have DocuSign that is expecting to go public later this year. And so this is a very vibrant time for companies that are really thinking about how do you move from on-premise to cloud computing and SaaS-based applications. And so you're really seeing a very vibrant IPO market.
This is certainly your area of expertise. I'm curious what you think about the Dropbox IPO in particular, given increased concerns about cybersecurity, more threats, more attacks than ever.
Yeah, what's happening is you have a lot of data, and data is what criminals are really coming after. And so Dropbox is a storage mechanism for lots of your data. And so if you're going to target something, whether it be ransomware or pictures, your financial data, they're coming after things like Dropbox. And so they need to have the right and appropriate security defenses.
Now, David, Better Cloud just raised $60 million in funding. Obviously, security is a huge focus for you as a software solution. What does your company add to this market that currently isn't being served?
Well, the thing that's happening is that there's this massive shift, like Enrique said, going from on-premise to the cloud and specifically to SaaS applications, and it's changing the way that we work. I actually think this is the biggest shift in how we work for the last 20 years. The last time we had a shift like this was when we started getting email on our phone. And now you look at how we're working with files in the cloud, and nothing's living on the device anymore. It's all in the cloud. And so what we do is we help companies secure those SaaS applications that they're using, and all of that data that is being moved around, being shared, collaborated on, we help secure that.
How concerned are you, Enrique, that this shift in how we work to the cloud, to more shared workspaces in the cloud, is making us more vulnerable?
I think what's happening is you really have to think about what are you doing in the cloud and what are the sites you trust. So if you work with companies like Salesforce.com, Workday, I think those companies take security so seriously that you're in really good shape. I think it really comes down to what are you doing and what are you looking at and what are you going after. But there's so many new technologies that are coming out. I mean, recently, we led an investment in a company called Evident.io that Palo Alto Networks just bought. We also led the investment in David's company, and it is all about managing and securing across all of the SaaS apps. And that's what's important, is if we're going to be protected, we need to have the right technologies.
Now, David, I have to ask you, Better Cloud, just a year ago, Forbes reported you were close to near death, that's the word, that Forbes used, and you had done an entire rebuild, and it wasn't working, but somehow you changed course, and now you're in the billion-dollar club. What happened?
I mean, what happened was that we had spent 2 years building this new platform that, like Enrique said, goes across SaaS applications and helps control and secure those SaaS applications. And what happened about a year ago was when we launched this platform, we realized that our message and our pricing and some of the details in how we went to market was not resonating. And as soon as we changed that, that was when we saw this explosion in terms of adoption. And so we were never really near death per se, but we did have a challenging couple of quarters, and we turned that around in Q3 once we changed that messaging, nailed that, and as well as the pricing.
Enrique, the cloud is, companies are at war for a piece of the cloud right now, whether it's Amazon or Google or Microsoft. Who owns the cloud of the future? Is it one company? Is it always going to be many, many companies? Or, Amazon is potentially on its way to a cloud monopoly.
I think what you're seeing is we're in a 20-year transition to the cloud, and we're still in the very early innings. What you are seeing is a real proliferation of lots and lots of companies, new companies that are taking up different pieces. What we know that is clear is everything we do is moving to being more cloud-based. You're using Office 365 from Microsoft, you're using G Suite from Google, you're using Dropbox, you're using Slack. And so I don't think there's any one company that is going to own the cloud. There is going to be, quite frankly, hundreds and probably thousands of applications that we use every day. And what you have to think about is how do you work with those applications? What will you trust? And all of the different businesses that I work with, what they talk to me a lot about is how do you secure your data? How do you enforce what users can and can't do? How do you protect their data? How do you enforce privacy? And so I think there's not one owner. I think there is hundreds of businesses that will flourish in the cloud.
David, there's been some controversy around how much the tech industry should work with the U.S. government. For example, the Pentagon is considering offering a huge cloud contract to a single cloud provider. Amazon is, supposedly in the lead, but some of the competitors have a problem with that. Meantime, you have Eric Schmidt testifying that tech companies should be helping the government, using AI and, some of the many technological advances. Do you think Silicon Valley should help the U.S. government, and to what end?
Well, I think that if we can help the U.S. government and drive them to the cloud and using not just cloud and infrastructure from Amazon, but SaaS applications, which we've actually seen and work with a number of government agencies that have already migrated to using some of these SaaS applications that we mentioned before. And I actually think that that's a good thing for us long term, because if we can move the government, the U.S. government, to start using cloud and cloud applications, then there's really nothing that's off limits. There's no business, there's no industry that's off limits, and I think it's a good proving ground for a lot of these technologies. We've now reached that tipping point where they're trusting the cloud, they're trusting these new applications. That's a sign that we've hit that tipping point, and it's about to accelerate, in my opinion.
Enrique, I'm sure you've been following this Facebook controversy. Obviously, the social network under fire about data privacy, about state actors meddling on the platform. Do you think tech needs to be regulated?
When you think about it, the key is what's going on for the consumer. and ultimately you got to protect consumers. And when you have too much information in anyone's control, you have to make sure that the appropriate safeguards are in place.
Does Facebook have too much information?
Well, I think there's a lot of cloud providers who have a lot of data, and I think you start with how are they doing to protect your data. And then the government has to step in when you think it's being mishandled. I would tell you, as a user on Facebook, I think they do a good job of keeping their settings up to date and controlling what people can and can't see. Is there an opportunity probably to make some improvements? I think so.
All right, Enrique Salem of Bain Capital, David Politis, Better Cloud CEO, thank you both. Coming up, he is the world's richest man, and he makes 59 times more than the median Amazon worker. We crunch the numbers next. This is Bloomberg. On Wednesday, Amazon dropped a massive number, 100 million. That's the number of Prime subscribers, but it is another number that has people talking today, 28,466. That's the median salary of Amazon employees. Contrast that with the $1.7 million CEO Jeff Bezos took in last year. And oh yeah, he's the world's richest man at a net worth of $127 billion. The number looks even more shocking when contrasted with the $240,000 median pay at Facebook. Here to tell us more, the man who literally wrote the book on Amazon, The Everything Store, Bloomberg Tech senior executive editor, Brad Stone. So obviously this is a sign that Amazon is built on the back of a small army of workers who don't make any money.
Well, I might not put it that way. I mean, I think that these are dramatic comparisons because they're probably not the right comparisons to make. I mean, Amazon is 2/3 a blue-collar company, right? There are a network of 200 plus fulfillment centers around the world. These workers, full-time workers, make $14 an hour median. It's about average for that kind of work. Amazon presents benefits that probably other warehouse type companies don't present. On the other hand, it's not a union workshop, so the $14 an hour probably comes in a hair under what other warehouse workers make. So that's what you get. This is a 500,000 plus person company, lots of seasonal workers, so part-time work, that's probably impacting the numbers as well. Amazon brings on 100,000 people every holiday season. So, to compare what they make versus what a programmer at Facebook or Google might make, it's not quite apples to oranges.
What do you make of this Prime number, 100 million members, now more than Costco, better retention? Obviously, again, two different beasts, not necessarily apples to apples, but showing the hold that Amazon has taken. I mean,
so the subscription business is a great business, right? 90% plus retention. People don't really reevaluate it at the end of the year. Plus, they probably have some sort of inherent instinct that they're getting their value out of it, and that's where the Prime Video and the Prime Music comes in. Amazon's constantly adding benefits to Prime subscription. That was, in fact, one of the messages of Jeff Bezos' shareholder letter, which is, customers keep wanting more. Amazon keeps larding Prime membership with benefits. It's probably a more upscale membership compared to Costco. I think maybe there are some people that have both, but this is where the strength of that retail business is based on, those Prime members who continue to, spend $99 a year and then continue to buy on Amazon.
In a way, isn't Amazon part of its own problem when it comes to raising expectations? Amazon is raising our expectations.
Yeah, that's right, and it's part of why we're seeing such a shakeout in the rest of the retail world, because the ground is tilting here, and customers expect more. And when they walk into, say, a Sears, and it's the same customer experience that it was 20 years ago, they get unsatisfied.
You have a piece out also this week on the other Jeff Wilke, who is the CEO of Amazon Consumer Worldwide, less talked about, but very important. And you focus on his role in harnessing the power of AI at Amazon, which is an extremely big job given that Google, Apple, Facebook, everyone wants it.
Right, and it's what he wants to talk about these days. I mean, he's sort of a hard person to interview. He wants to talk about AI. Google, to some extent, Microsoft are known as deep research organizations. I would say Amazon does a better job applying AI to products. So you've got, not just the Alexa, but you've got this Amazon Go store using AI to create a cashierless experience in Seattle. They might start expanding that soon. You've got Kiva robots moving inventory around their warehouses. and who knows what else. So it's one message that Amazon wants to get out there, which is that they're competing for AI talent and creating AI products as much as these other companies.
And talk to us a little bit about Jeff Wilke's bigger role at the company. He's been there for a very long time, and he's got half the business, essentially.
Pretty much. I mean, there's a cloud business under Andy Jassy. Wilke, you can think of him as being responsible for, what they sell you, what's available, and then figuring out how to most efficiently get it to your house. So he started out by basically, designing Amazon's entire fulfillment network, its supply chain, creating fulfillment centers that that don't ship pallets to stores, but figure out how to get individual items to people's houses. And Bezos has just really come to trust him. So over the years, he has taken on more and more responsibility.
Uber, meantime, has hired a CFO. Definitely want to ask you about that. Driving towards an IPO, as Dara Khosrowshahi, the CEO, has been very public about that 2019 could be the year.
Yes, so our colleague Eric Newcomer broke the news that Zane Rowe, the previous CFO at VMware, is taking the role at Uber. He was also at Continental, before that Apple. So obviously someone with a ton of experience, a kind of professional CFO, and someone who might be able to instill some confidence among these big public institutional investors, that Uber can handle the cost side, which has been spiraling out of control, and get the company to profitability.
Another company that's still not profitable. Okay, Brad Stone, our senior executive editor, thank you so much. Coming up, Apple angst. The tech giant drops as a key iPhone chip partner forecasts weak demand for smartphones. We'll bring you the very latest next. This is Bloomberg. Lyft plans to spend millions of dollars a year to fund projects that would offset the pollution created by drivers. The move could help the second largest U.S. ride-hailing company draw environmentally conscious customers from rival Uber. As part of the program, Lyft hired 3 degrees to oversee carbon offset investments. Those will include efforts to reduce pollution in auto manufacturing and forest conservation. Qualcomm announced that it will cut 1,500 jobs in California, the majority at the chipmaker's San Diego headquarters, according to documents filed with the state. This is all part of a pledge the company made back in January that it would slash $1 billion in expenses to improve earnings as part of its efforts to fight off a hostile takeover bid from rival Qualcomm. And as we mentioned earlier, faith in the continuing strength of Apple's iPhone business may be wavering. The unease on Wall Street today comes after Taiwan Semiconductor, a major Apple supplier, announced a forecast for second quarter sales that fell short. Meantime, the IMF noted this week that the global smartphone market may have peaked and that shipments declined for the very first time. Shares of Apple and major chip companies are trending lower. Bloomberg Technology's Peter Elstrom joins us now from Tokyo. So, Peter, the view from Asia, break this down for us. Obviously, this is where most of Apple's suppliers are located.
That's right. And TSMC is particularly closely watched. It's a key chip maker in the supply chain with Apple. And they give these forecasts. We were able to dig out this information a bit early in the presentation yesterday, where their forecast for next quarter is quite a bit lower than people had anticipated. And as you saw in the market today, that was taken as a negative sign, not just for TSMC, but for the others that kind of depend on it, beginning with Apple, including others in the supply chain for smartphones in particular.
So, talk to us about what we're seeing with Qualcomm here. More job cuts, a probe in China. What's the latest?
Well, the probe in China is a bit concerning at this point. So Qualcomm has to go to the Chinese government to get approval for this acquisition of NXP. They proposed that more than a year ago, and it's been dragging on and on and on. And so what China's regulator, the Ministry of Commerce, said yesterday is this is the first time they've said this on the record, that in fact they have been reviewing the deal and that that Qualcomm has been offering some remedies, and they are not sufficient at this point. So Qualcomm had to pull pull back that application and then refile the application and set this new deadline 3 months from now. And what they want is they want some reassurances that the combination between the two companies is not going to have detrimental effects for its domestic companies in particular. They buy a lot of semiconductors in China to put into different products that are then shipped around the world, so they have a big say in this deal.
How does this fit into the trade tensions happening now?
Well, Qualcomm and MOFCOM would like to say that this doesn't have anything to do with the tensions between the U.S. and China, but it appears it could become a bargaining chip between the two countries as they're trying to work out these trade negotiations. Of course, Donald Trump has threatened tariffs against China for practices that his administration has called unfair. In response, China has responded with its own tensions. And then earlier this week, you saw this very dramatic move where the Commerce Department in the U.S. decided to cut off ZTE, the big telecom equipment maker, from buying any kind of components from American suppliers. That's critical. That includes Qualcomm, not coincidentally. And so Qualcomm's approval from the Chinese regulators may end up getting caught up with these other negotiations over exactly what the tariffs are going to be or what kind of approvals, what kind of practices Chinese companies are going to be able to use as they work with the United States.
All right. Well, I know you will be continuing to follow for us, bringing us the outcomes. Our Bloomberg managing editor for Asia Tech, Peter Elstrom, thank you so much for joining. And that does it for this edition of Bloomberg Technology. A reminder, we're live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.